Hello students, this is Dr. Kinnari Dhruve. The lecture is on first unit of cost accounting paper, semester 3, core elective, code is 201. We are going to discuss some of the topic of unit 1 of this paper. The unit 1 of this paper is Introduction to Cost Accounting. That is, what do you mean by the cost accounting? What are the features of the cost accounting? What are the advantages, disadvantages, and limitations of the cost accounting? What are the scope of the cost accounting? What is the difference between cost accounting and financial accounting? What are the cost concepts? What are the cost audits? What are the cost control techniques of the cost accounting? The paper code is Core Elective 201A Cost Accounting Semester 3 of BCom. This is your first unit that contains 25% of your total syllabus. That means if your paper is 70 marks, then 25% of 70 marks is consist of first unit. That is Unit 1, Introduction of Cost Accounting. Under this unit, the contents are meaning and definition of cost accounting, need for cost accounting, advantages and limitations of cost accounting and financial accounting, cost concepts and cost objects, elements of cost and classification of cost, method of cost accounting, techniques of costing with emphasis on uniform costing, cost centers and cost unit, and installation of good cost accounting system. In today's lecture, we are going to discuss these are the topics from the unit 1. The topics are meaning of cost accounting, evaluation of cost accounting, definition of cost accounting, characteristics of cost accounting, relationship of cost accounting with financial and management accounting, costing, cost accounting and cost accountancy, objectives of cost accounting, scope of the cost accounting, advantages and limitation of cost accounting, and difference between cost accounting and financial accounting. Remaining topics, that is from here, cost concepts, cost objects, elements of cost accounting, and many other will be covered in next lecture. So, first of all, when this cost accounting concept has been emerged, if we think in 15th century, there will be no formal accounting system. There is a barter system. In a barter system, the people have no currency or no monetary value, but they exchange their goods with other people who are requisite of any other goods. If some people is in need of wheat and if some people is in need of cotton, then they exchange need and cotton, wheat and cotton with each other. It was in the last years of 15th century, Luca, an Italian, found out the double entry system of accounting in the year 1494. That means the double accounting system has been emerged in 1494, in 14th century. During this 400 years, the purpose of cost accounting needs are served as a small branch of financial accounting, except a few like Royal Wallpaper Manufacturing in France, that is 17th century, and some iron masters and potters, that is 18th century. What does that mean? In 14th century or in the beginning of the 15th century, there is no separate cost accounting concept. The cost accounting is treated as a branch of financial accounting. The few companies, as mentioned here, that is Royal Wallpaper and Iron Masters and Potters, have their different branch of cost accounting in their accounting section. The period of 1880 AD to 1925 AD saw the development of complex product designs and emergence of multi-activities diversified corporations like DuPont, General Motors, etc. This period denotes to industrial revolution. The industry structure becomes more and more complex. What does that mean? The accounting needs of these multi-conglomerate companies would change from simple bookkeeping to various branches of accounting. It was during this period that scientific management was developed, which led the accountants to convert physical standards into cost standards, the latter being used for variance analysis and control. During the World War I and II, the social importance of the cost accounting grew with the growth of each country's defense expenditure. In the absence of competitive markets for most of the market material required for the war, the governments in the several countries placed cost plus contracts under which the price to be paid was cost of the production plus an accurate rate of profit. The reliance of the cost estimation by parties to defense contracts continued after World War II. What does that mean? With the Industrial Revolution and the situation created after World War I and World War II, there are some markets where monopolies has been established, such as defense mechanism. In defense mechanism, if one country has well-equipped machineries for war, then what that company do? They estimate their cost of equipment plus the profit they want to receive from such production, then they will determine such pricing because he is in the monopoly of defense mechanism. There is no such competition. So there is a no market driven price. So here the cost accounting concept is emerged. Cost accounting concept here refers to cost plus profit is equal to selling price. So after World War I and World War II, what situation has been arised gave the real path for the cost accounting as the main branch of accounting. Now we can say today now there are 7 branches of accounting, that is financial accounting, cost accounting, management accounting, inflation accounting, replacement accounting, and many other more. But if we broadly see, there are 3 branches of accounting, that is financial accounting, cost accounting, and management accounting. What does financial accounting do? Financial accounting records and represents the financial data to provide the information for outside stakeholders such as government, such as equity shareholders, debenture holders, and other creditors. The financial accounting show the profit and loss of the firm for a specific period and actual financial position of the company for a particular debt. Now, what does cost accounting do? Cost accounting mainly is concerned with the ascertainment of cost of a product or a service. The main purpose of the cost accounting is ascertainment or determination of a cost of a product or a service. Cost accounting deals with the cost control in the firm through establishment of cost centers. Cost accounting uses of various cost techniques and costing tools to minimize and maintain the cost efficiency, cost control in the organization. Now, what is the management accounting refers? The management accounting is a branch of accounting which represent the financial as well as cost accounting data, which helpful in management decisions through various managerial techniques. Management accounting focuses on future, utilizing past accounting data as well as estimate of cost accounting data. The management accounting which is helpful in managerial decision making process. Now, evaluation of cost accounting, as we discussed in the first slide of this presentation, that the cost accounting generally overall the world has been developed in 15th century, where there is a industrial revolution and the concrete idea of the cost accounting develops after the World War I and World War II, where several countries are in monopolies to develop, to provide the defense mechanism, defense tool to other companies. Now, if we see for in Indian context, the Institute of Cost Accountant and Works Accountants of India, that is ICWAI, was established as a company limited by a guarantee for the development of cost accounting in India. The main purpose of this to develop the cost accounting as a profession. Now, the maintenance of the cost accounting records becomes mandatory since 1965. Before 1965, there is no compulsion to maintain your books of accounting as per principles of cost accounting. But after the 1965, certain companies which are notified under the Companies Act 2013 have to maintain their cost data according to the principles of cost accounting. After the addition of section 209 subsection 1D in the Companies Act 1956, please refer here Companies Act 2013. The Institute of Cost Account and Works Accountants of India has recently issued cost accounting standards. Such standards has been already issued by Institute of Chartered Accountant of India. You already know that it's accounting standards. Here you are going to refer 1 to 4 cost accounting standards. Cost accounting standard 1, classification of cost. Cost accounting standard 2, capacity determination. Cost accounting standard 3, allocation and apportionment of overhead. Cost accounting standard 4, cost of production for captive consumption. Section 148 of Companies Act 2013 lays out the provisions and requirements concerning the cost records and cost audit applicability. Rule number 3 of the Companies Cost Records and Audit Rules 2014 identifies the companies who are required to keep cost records, undergo a cost audit and submit cost audit report in 2 separate sections defined by such section. What does that mean? This means all the companies, whether limited or whether the private limited or public limited, they have to audit their books of accounts as per the Companies Act 2013. But some of the companies which are mentioned under the section 148 has to done a cost audit of its cost accounting data as per the rule number 3 of the Companies Cost Records and Audit Rules 2014 issued by the Finance Ministry or issued by a ICAI. Now, what do we mean by the cost accounting? In simple meaning, cost accounting can be explained as follows. Cost accounting is the process of accounting for a cost which begins with the recording of income and expenditure and ends with the preparation of statistical data. That means cost accounting is only concerned with profit or loss on the basis of product, not for a period. In case of a financial accounting, there are 2 statements, profit and loss account and balance sheet. What profit and loss accounting shows? Profit and loss accounting shows the profit and loss for the specific period, and balance sheet shows the financial position of the firm for a particular date. But in a cost accounting, on the basis of the product, what will be the future profit and what will be the future loss, and what is the profit and loss on the basis of a product is to be determined. It is the formal mechanism by means of which cost of the products or services are ascertained and controlled. It establishes the budgets, standard cost and actual cost of operations, processes, departments or products, and the analysis of variances, profitability and social use of funds. Now, cost accounting establishes predetermined standards. Then, with this predetermined standards, cost accounting compares the actual data. Whatever the variances are there, cost accounting makes the analysis, finds the responsibility centers and feedback the top level management. Thus, cost accounting is a quantitative method that collects, classifies, summarizes, and interprets information for a product costing, operation planning and control, and decision making. Now, there are various definition has been given in various books. The students can also find out the definitions of cost accounting in internet. For the presentation purpose, I had taken only one definition, which is given by Institute of Cost and Management Accountant of India. According to ICMAI India, cost accounting is a classifying, recording, and appropriate allocation of expenditure for the determination of cost of the product or services and for the presentation of suitable arranged data for the purpose of control and guidance of the management. Now, on the basis of this definition, we can find out the features, some of the characteristics of the cost accounting. Here, on the basis of above definitions, I had underlined certain features of the cost accounting. First is a cost accounting is that branch of accounting which measures and reports information relating to cost of acquiring and utilizing resources. Second, cost accounting provides information for both management and financial accounting. For an example, for the management accounting, it shows what should be estimated selling price for a particular product. And for the financial accounting, if the valuation of the stock is based on cost or market value, whichever is lower. If financial accounting does not know what is the cost of the closing stock, it cannot decide if the closing stock is to be valued at a cost or market price. Thus, cost accounting provides data both to the management accounting as well as financial accounting. Cost management describes the approaches and activities of managers in short run and long run planning and control decisions. These decisions increase value of customers and lower cost of products and services. Cost is an integral part of the company's strategies. So these are the characteristics, these are the main characteristics I had outlined from the definition of cost accounting. Students are here advised to read the definitions given by various experts, various authors. You can find definitions in internet as well as some of the reference books of the cost accounting. Now, financial accounting provides information to external parties, that is investors, creditors, regulators, that is government, etc. Managerial accounting provides information to internal users such as managers. Fine. Now, cost accounting provides information to both the parties, that is internal as well as external users, product cost informations, etc. Thus, we can establish the relationship among three branches of accounting, that is financial accounting, management accounting. Here, financial accounting provides data to the outsider stakeholders. Management accounting provides the data, the information to the inside stakeholders, but the cost accounting provides information to both respective parties, that is for the outsider stakeholders as well as for insider stakeholders. For an example, cost accounting with help of various cost accounting tools and techniques helps the managers in determination of various prices, selling prices of product in different market situation. For a financial accounting, cost accounting gives the inventory valuation, the material requirement, the labor requirement, etc. Now, what do you mean by the costing, cost accounting, and cost accountancy? First of all, we will study with the costing. Now, costing is the base of the cost accounting system or cost accountancy. In simple word, costing is a technique of ascertainment of cost. Ascertainment is a determination of cost. That is, what should be price of single product or what should be price of this product in a particular market. The technique through which the cost is determined for a product is known as a costing. Now, cost accounting broadens the concept of costing, that it collects, classifies, summarizes, and interprets for a product costing, operational planning, control, and decision making. That means cost accounting not only determine the prices or not only determine the cost of the product, but it also control the cost of the product. And cost accountancy is broader concept than costing and cost accounting. It is an application of costing as well as cost accounting principles, methods, techniques to the science, art, and practice of cost control and ascertainment of profitability. In cost accountancy, the principles of cost accounting is applicable in such a way that it maximizes the profit of the organization. Now, what are the objectives of the cost accounting? Here I had mentioned some of the main objectives, or I had underlined some of the main objectives of cost accounting. First is to ascertain the cost under different situation, using different techniques and system of a costing. Here I had underlined three words: different situations. What does that mean? It means the nature of the firm, the nature of the business of the firm. Rather, we can say the nature of the business of the firm. Suppose there are two types of industry. One is a manufacturing industry and another one is a service industry. Now, in both industries, the cost ascertainment is different scenario. In manufacturing industry, you can physically count the units, that 1000 units is to be produced, 2000 units is to be produced for a particular year. While in service industry, you cannot physically count the number of units of the production, but you know what is the unit of the service of the service provider. So different situations here means the nature of a business of the firm. For both industries, that is manufacturing industry and service industry, the cost ascertainment differs. Now, using different techniques and systems, here two words are used: costing techniques and costing system. Cost system refers the method of the ascertainment of cost or a determination of a cost, while costing techniques refers the various tools, mechanisms through which already determined cost can be controlled. So the first objective of the cost accounting is to ascertain the cost under different situation using different techniques and system of the costing. The second one, we can say that to determine the selling prices under different circumstances. This is the main objective of the firm, because for an example, the product which is manufactured in America or in other country cannot be sold at the same price in India, because some of the import export duty you have to pay, some of the monopolies advantages you want to receive, some of the quality service providers benefits you want to receive. So under the different circumstances, the selling price of a single product can be different, and it can be ascertained through cost accounting. To determine and control efficiency by setting standards for materials, labor, and overheads. Now, material, labor, and overheads are main cost elements of any manufacturing product. With determination of the standards for these three particular elements of cost, the efficiency in production process can be achieved. To determine the value of closing inventory for a preparation of financial statements of concern, to provide a basic for operating policies which may be determination of cost volume relationship, whether to close or operate at a loss, whether to manufacture or buy from a market, whether to continue the existing methods of a production or replace it by a more improved method of a production, etc. The last objective refers that to help managers in managerial decisions. Now, what are the managerial decisions? Cost volume relationship, whether to operate or close at a loss, whether to manufacture or buy. They are major cost, they are major managerial decisions. Now, what are the advantages of cost accounting? The cost accounting is advantage to management, to employees, to creditors, to government, and to consumers and public. For the managers, it can be helpful in various decisions such as helping in price fixation, revealing profitable and unprofitable activities, identifying the ideal capacity which has been unutilized in any plant, in controlling cost, and also helps in inventory control. For the employees, cost accounting introduced wage schemes, bonus to the efficient and sincere employees, which in turn increasing productivity, profitability, and lowering the cost. For the creditors, the cost accounting helpful in better management of finance through cost accounting leads to timely debt service by company in form of repayment of loan, payment of interest, to stay and grow in competition, and for the judging soundness of the present and prospective borrower. And cost reports give better picture of efficiency, profit, and prospectus and capacity. The government can guide through cost accounting with preparation of plans for economic development of the country, to make policy regarding taxation, excess duty, exports, price, selling, granting, subsidy, etc. Many times you can read in the newspaper or you hear from the news channels that in certain product and certain services the GST rate has been increased or decreased. Now, how can government can determine these rates? The government can accumulate various cost reports has been prepared by the various industries. Here I am mentioned industries, not a single company. And on basis of that, on basis of the revenues generating for a particular industry, the government can fix the GST rates. Now, benefits to customers and public. Cost accounting helps consumers in getting goods of a better quality at a reasonable price, because the main objective of the cost accounting is to give reasonable price with a better quality, and by through each maximize the profit of the organization. The other benefits are cost control of material cost, control of labor cost, control of overheads through fixation of standards, measuring the efficiency. It is important. Cost accounting measures or cost accounting provides information regarding standards and actual performance of the cost concerned activity in measuring efficiency. Cost accounting prepares various types of budgets. The budgets are a guiding point for a particular activity, for a particular project, or for a particular production or a production process. The actual data should be compared with budgets. Some of the budgets may be adjusted with the situations. Main objective, price determination. On behalf of the cost accounting, information management is enabled to fix remunerative selling price for various items of the product and services in different circumstances. Expansion. This is the managerial decision. The management may be able to formulate its approach to expansion on the basis of estimates of production of various levels. Suppose if some of the product is working good at domestic level, if this product should be worked in different country with the same profit, or with some of the added features should be there with the product. These of the managerial decisions are these of the managerial decisions can be taken with the help of the cost accounting. Now, apart from these definitions, there are certain limitations of the cost accounting. First of all, it is not reliable because cost accounting uses major estimates. Now, cost accounting estimates the budgets of various types of activities. It cannot provide the concrete picture or actual picture of any particular activity or a production process. Now, cost accounting system has failed to produce desired results in many concerns. Thus, it could not be said this system is at fault. The cost accounting system is very expensive and it is not feasible to install by small scale industries. It is not necessary in business concern and it involves duplication of work because cost accounting only represents profit and loss for a particular product. Now, for a particular period, what is profit and loss with the overall manufacturing unit is already prepared by the financial accounting. So there is no need to maintain the cost accounting data. In applicability, modern methods of the cost accounting are not applicable to every type of industries. Expenses, it is expensive because double set of account books has to be maintained and its introduction involves considerable amount of expenditures. Now, what are the scope of the cost accounting? The scope of the cost accounting starts from cost ascertainment to cost audit. The cost accounting starts from the determination of costing to the audit of the costing. From the determination of costing, it moves to cost accounting, then it moves to cost control, then it moves to cost reports, and last, those reports should be audited by professional cost accountant. Now, first of all, what is a cost ascertainment? The main object of cost accounting is to find out the cost of the product, service rendered with a reasonable degree of accuracy. Cost accounting, it is a process of accounting for cost which begins with the recording of expenditure and ends with the preparation of statistical data. Cost control, it is the process of regulating the extent so as to keep the element of cost within the set of parameters. Cost reports, this is the ultimate function of cost accounting. These reports are primarily prepared by the use for the management at different levels. Cost reports helps in planning, cost control, performance and appraisal and managerial decisions making. Cost audit is the verification of the correctness of cost accounts and check on the adherence to the cost accounting plan. Its purpose is not only to ensure the arithmetic accuracy of the cost records but also to see the principles and the rules have been applied correctly. Let me give one of the example, and with this example I will try to explain the scope of the cost accounting. Suppose you own a manufacturing unit, and in manufacturing unit you are going to produce sanitizer. Let me see the current COVID-19 scenario. Now, first of all, you are going to determine what should be the price of single bottle of sanitizer. Then you are going to apply the cost accounting on the books of the accounting. You collect, you classify, you summarize your data, your accounting data as per the principle of the cost accounting. Now, third step is cost control. You determine certain predetermined standards for the materials, labors and overhead used in production of this sanitizer bottle or sanitizer bottle. Now, after this, you prepare the reports. In these reports, you show how much bottles has been produced, at what cost, what are the selling price of this sanitizer bottles, what is the closing stock, what is the valuation of the closing stock, and last one is a cost audit. You show or you check your cost accounting data, or you employed some cost accountant professional to check whether your cost accounting data is correctly written as per the principles of the cost accounting. So here are the scope of the cost accounting. Next one is a difference between the cost accounting and financial accounting. I suggest students, please prepare this question with utmost accuracy because this is most IMP question for theory concept. I already told you that this chapter consists 25% of syllabus. It is a compulsory chapter. You have to write down theory. From this chapter, you are going to write down 14-mark question. The bifurcation may be 7, 4, 3 or 7 or 7. We don't know. But this is most asked question in Gujarat University paper. That is cost accounting versus financial accounting. The difference between cost accounting and financial accounting. Some of the bifurcation point I had outlined, that is what is the purpose, what is the coverage, what is the data, what is the scope, what is the parties involved, and what are the statements, what is the stock valuation, and what are the legal requirements under these two sets of accounting. If we see from the viewpoint of purpose, cost accounting helpful in managerial decisions, while financial accounting show the financial position and result. The cost accounting only cover product cost. It does not cover any period cost. Now, what is a product cost and what is a period cost? In our example, you are going to produce a sanitizer bottle. In sanitizer bottle, you are going to require some of the materials. Now, material is a product cost, but the factory in which this product is produced, the sanitizer you are going to produce, the rent of that factory is a period cost. So cost accounting only considers the product cost. It does not consider the period cost. While financial accounting only concerned with the period cost. It shows what is the profit and loss for a particular period. While cost accounting shows what is the profit and what is the loss for a particular period or a particular service. Now data. Cost accounting uses past as well as estimated data, while financial accounting only deals with the historical data. The scope of the cost accounting, we can say, rather narrow because it is related to particular product, service and project, while financial accounting includes every commercial transactions for a specific period of a time. Now, if the company have an excess fund, for an example, the company can have option to invest such fund in other securities and it can earn regular income. Now, these regular income can be shown in credit side of profit and loss account, but the cost accounting will not consider the income earned through this investment in the receipt side. So scope of the financial accounting is greater than the cost accounting. Parties, here in cost accounting, all internal parties are involved: managers, employers, laborers, etc. While in financial accounting, government, stakeholders, creditors, equity shareholders, debenture holders are more concerned. Cost accounting only prepares the statement of cost, while financial accounting prepares financial statement consist of profit and loss account, balance sheet, cash flow statement, etc. The valuation of a cost under the cost accounting is based always at a cost, while in financial accounting, the valuation of a stock, maybe it finished goods, maybe it's raw material, inventory, or work in progress, the value of the stock may be at a cost or a market value, whichever is lower. Generally, the cost accounting can be applied on voluntary basis. It is not mandatory. But only in certain industries, cost accounting records are kept as per the Companies Act. While financial accounting is compulsory for all kind of industries, the financial accounting is in requirement of Companies Act 2013 as per section 128 and Income Tax Act 1961 section 448A. So here are the topics has been covered from the unit 1. From the next unit, from the next lecture, we will try to learn. Let me show you the remaining topics. We will further continue what are the cost concept, what do you mean by the cost concepts, what are the cost objects, elements of the cost and classification of the cost, methods of the costing, techniques of the costing and installation of goods and good cost accounting system. Any question, just ask me in Microsoft Team. All English medium students have already registered in Microsoft Team. If any English medium student of Vivekanand Vanijya College has not registered, just try to contact me at the college at regular time. Thank you.